Welcome back to the channel. As always, if you copy trading, you are an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to speak today about a stock called Kingsoft Cloud Holdings, ticker KC. So, the story behind them is as follows. They are an AI infrastructure supplier to Xiaomi and China government. So, China government has been increasing their cloud ecosystem for quite a while for various reasons. And as you can see here with the chart, this small cap pivoted very, very low in terms of price from what you could call survival mode to actually showing structural growth and profitability. For the last 2 years, the company has been restructuring. It exited loss-making contracts, cut costs, and repositioned around AI training and inference cloud services. And that pivot has now paid off. On the second quarter of this year, they experienced a turning point where the AI revenue exploded, operating profit turned positive, and growth re-accelerated. At present, as you can see from this more recent chart, the company is at the intersection of two surging demand curves. The first one is AI compute expansion led by domestic large model training that is comprised by Xiaomi, Kingsoft Office, and others. And the other is sovereign and regulated AI adoption by the government, healthcare, and finance enterprises, where foreign hyperscalers can compete. In other words, this is an China AI play. The company has moved from being another Chinese cloud company to being the go-to infrastructure vendor for AI workloads in China's core digital ecosystem. In terms of the numbers revenue thesis, their revenue is up 24% year on year, accelerating 11% in Q1. AI gross billings are up 120% year on year, and the ecosystem demand is 27% of the revenue. That is Xiaomi and Kingsoft. The profitability, it experienced their first ever positive operating profit and 16% EBITDA margin in Q4 2024. And as you can see, the company has been moving up ever since. So as you can see, these are not future hopes. The company is now established, it's profitable, it's growing, and it still has plenty of tailwinds ahead of it. And what are those exactly? Well, first of all, the company delivered a 512 node GPU cluster to Xiaomi in March and said it is already delivering an even larger one. Each cluster represents hundreds of millions of yuan in incremental public cloud revenue, typically recognized as usage ramps within the next quarter. That means that Q3 and Q4 will book higher utilization, boosting both top line and operating leverage. Exactly the mechanism that flipped them into profitability last time. Another thing is the government and enterprise AI rollouts. This is something that is to be expected in China. The AI push from the government is incredible in terms of surveillance of citizens, in terms of building an infrastructure. And in this order, the company delivered and launched an AI all-in-one appliance for the Chinese government agencies. That is a packaged AI with hardware and model solution for regulated environments. They've already deployed it in Changchun, Wuhan, Zhejiang, and Chongnan hospital systems. And a big important part of that is that China's Q4 government procurement cycle, which is taking place between October and December, is when provincial and municipal agencies sign new contracts. In terms of other tailwinds, customer prepayments are funding growth without dilution, ensuring that EPS is flowing through. The company revealed that cash doubled from, to 5.5 billion renminbi in Q2 because major AI customers prepaid for computer capacity. So that is a very good position for a company of this profile to be in. They're getting paid ahead of time. And management says that this model will continue with other large customers. Each prepayment means future revenue is locked in and CapEx is partially funded by customers, boosting cash flow and margins. And last but not least, the ecosystem flywheel turns into durable and compounding demand. The company's sole strategic cloud for Xiaomi and Kingsoft Office, the two fastest growing Chinese AI ecosystem. So shareholders already approved an 11.3 billion renminbi of related party transactions over 3 years. That's nearly 5 times their 2024 revenue just from these relationships. As Xiaomi's AI assistant and Kingsoft's AI rollout across hundreds of millions of devices, Kingsoft Cloud automatically earns more GPU, storage, and inference fees. So in summary, we have the following tailwinds going on. Cluster deliveries resulting in revenue spike, government projects transforming into sticky recurring contracts of the company, customer prepayments resulting in capital efficiency, and an ecosystem scale resulting in utilization leverage. Until recently, the company traded like a zombie China cloud stock, as you can see here from this chart. It was an unprofitable and depending on one customer company. But now it's profitable, is cash positive, and is exposed to China's hottest AI bid lab theme. The market, however, hasn't priced in yet the ongoing cost of deliveries, the government contracts, and the recurring prepayment funded growth. Each of this will hit before the next earnings window, which is expected to take place in late November. And when they do, analysts will have to revise both revenue and EPS forecasts upwards. That's how the stock moves. So in essence, this is China's AI infrastructure breakout. After years of restructuring, they're finally accelerating their revenue and their margins. And over the next 1 to 3 months, there will be a series of catalysts, cluster deliveries, government rollouts, and customer prepayments. For a company with this market cap, we could expect a significant move, as is evidenced by the volatility of the options for the stock, which is in the high double digit. Hope you enjoyed the video. See you soon.